All right, let's talk about this past week in the markets because it was an absolute roller coaster. Seriously, it was packed with some of the most conflicting signals we have seen all year. You got these huge geopolitical threats on one side and this incredible surge of economic optimism on the other. So let's just dive right in and try to make sense of what on earth is going on.
Okay, so right off the bat, this is the core puzzle we have to solve. I mean, how is it even possible that in the exact same week, gold, the ultimate I'm scared asset, was rocketing towards a record high, topping $4,100 an ounce, while at the same time, the S&P 500, which is basically our report card for investor optimism, finished the week up 1.2%. It doesn't make sense, right? Fear and optimism are supposed to be opposites, but right now they're both screaming at the top of their lungs.
To really get this, we've got to look at how the week played out, because it was just this rapid-fire series of events. It all started pretty good on October 22nd, with some really strong economic data suggesting businesses were expanding. But then, on the 24th, bam, we got hit with a double whammy. First, a massive tariff threat that completely spooked global markets, and then, almost right after, some surprisingly soft inflation data that shot a wave of hope through the system. And all of this just set the stage for gold's big record-setting surge on Friday.
So first, let's break down that shockwave. The single biggest driver of fear this week came straight out of Washington, and believe me, it had investors all over the world holding their breath.
Just look at that number, 155%. This is not a subtle negotiating tactic. A number this big is a cannonball aimed right at the global economy. It threatens a massive, massive disruption to supply chains, and it put everyone on high alert instantly.
And you could see the impact immediately. This wasn't just talk. The tech-heavy Nasdaq dropped 2% right after the news broke. Hong Kong's market fell 1.5%. This was a classic risk-off moment, where everyone just dumps their stocks and runs for cover. But that's when the story took a really sharp turn.
Just as that fear was really starting to take hold, the market got hit with an economic counterpunch, and it came from what you'd think is a pretty boring data release, but it completely changed the narrative for the rest of the week.
So here's the number that mattered, 3.0%. September inflation came in just a tiny bit cooler than the 3.1% everyone was braced for. Now, you might be thinking, 0.1%, who cares? Well, in the world of central banking, that is a huge deal. It's a signal to the Federal Reserve that inflation is cooling down, and that gives them room to maneuver.
And what that really means is it's a green light for the Fed to step in and support the economy if things like, say, a trade war start to get ugly. This one piece of data flipped the entire conversation from fear of tariffs to hope for stimulus.
And just look at the result. The market went from kind of hoping for a rate cut to being almost dead certain of it. Traders are now pricing in a 98.9% chance that the Fed cuts rates at its very next meeting. I mean, that's about as close to a sure thing as you will ever see in financial markets.
And for anyone wondering why this is such a game changer, think of a rate cut as a booster shot for the economy. It just makes money cheaper for everyone. Businesses can borrow to expand, you can get a cheaper mortgage. It's all designed to get money moving, and it often gives the stock market a major lift. So you've got these two giant forces, geopolitical fear and economic hope, just battling it out. And that brings us to the third big theme of the week. Where are people actually putting their money when they have no idea which side is going to win? Well, they're searching for shelter. And this is so fascinating. Even as the stock market was clawing its way back up, investors were hedging their bets. They were also buying up assets that are seen as being outside the traditional system. You see gold up almost 1%, and Bitcoin, which a lot of people see as digital gold, was up an even stronger 2.5%. And you don't have to take my word for it. Here's what Ray Dalio, one of the biggest investors in the world, has to say. He basically argues that things like sanctions and tariffs, they do more than just mess with trade. They actually chip away at the trust people have in government-backed currencies, like the dollar, and that pushes them towards things governments can't print or control, like gold. This ties right into a huge, long-term idea called de-dollarization. Basically, as global tensions get worse, other countries get nervous about having to rely so much on the US dollar, and a threat like a 155% tariff, that's exactly the kind of thing that speeds up that thinking, which in turn makes an asset like gold look incredibly stable and attractive. And just to put this all in perspective, look at where a heavyweight thinker like Dalio sees this going. His base case for gold is $4,500 an ounce, way higher than even today's record.
This shows you that the serious underlying pressures building up in the global financial system are being taken very, very seriously.
Okay, so let's bring it all home. You've got geopolitical fear, economic hope, and a desperate search for safety all happening at the exact same time. The market is basically walking on a tightrope right now.
This is the tug of war that defined the week. On one side of the rope, you have all the forces of fear, the tariff threat, the long-term worries about the dollar. And pulling on the other side, you have the forces of hope, that near-certain rate cut, all thanks to the cooler inflation data. The real irony here? The very tariffs that are driving the fear could end up leading to higher prices, which creates an even bigger problem for the Fed down the road.
And the main takeaway is this. For now, for this week, hope just barely won out. The promise of more cheap money from the Fed was just powerful enough to overcome the fear of a trade war. But that balance is incredibly fragile. It could get tipped over by the next tweet, the next data point, you name it.
And that really leaves us with the ultimate question looking forward. The market is balanced on a razor's edge between these two powerful, opposing forces. Which one is going to pull harder next? That's the billion-dollar question that everyone is trying to answer. Thanks for tuning in.